the dangers of margin trading, and how it affects you. Welcome to Stocks Galore, the place for those in passionate pursuit of investments and personal finance. Smash the subscribe button now and hit the notification bell to be notified when new videos are released. You may ask, what exactly is margin trading? Margin trading is a type of trading that allows you to borrow money from your brokerage firm to trade on margin. The broker lends you money at a certain interest rate and takes collateral as an assurance. Margin trading lets you take bigger positions than your cash would allow and can be used as a hedge against risk exposure. Not all brokerages offer this service, so check with your brokerage before deciding if it's right for you. The risks of using margin trading for stocks. Margin trading is risky because the amount of assets you are using to purchase shares can go drastically down. It can often lead to market crashes, which are often the result of margin trading. Margin trading is when an investor borrows money from a broker in order to buy securities. The investor will then have to pay interest on any money that he borrows, which could be very high if they do not have good credit or collateral. This is why it is not recommended for beginners or inexperienced investors. 5 ways to avoid the risks of margin trading. Margin trading is a big risk in stock trading and the cryptocurrency market. If the price drops, you can lose all your money in no time. But if you know how to avoid these risks, you can easily make a profit on margin trading. The first thing to do is to use an intelligent stop-loss system and create a reasonable threshold for yourself, e.g., 20% of your current holdings. Secondly, if you see that the trend has changed and there is no new significant information on the market, close some of your positions with profits or cut some of your losses by closing those positions that still have losses. Lastly, remember not to trade on margin with more than 10% of your equity. For example, if you have 1,000 Ethereum, don't buy 2,000 Ethereum. What's wrong with winning big on a few bets? This is a phrase that many people in the marketing world have heard, but what does it actually mean? We will explore what winning big on a few bets means and how it differs from marketing as usual. In business school marketing courses, you'll hear about the marketing mix, which is comprised of 4 important elements: product, price, place, and promotion. The first 3 of these elements are critical to the success of a company, but they will not create a successful company if they don't have a promotion strategy or enough money to spend on advertising. What are the best practices for margin trades? Margin trading is a form of trading that enables you to leverage the money you have invested in order to increase your potential profit. However, it is essential that you familiarize yourself with the best practices for margin trades. We will cover some of the best practices for margin trades to help you make smart investments and avoid any pitfalls. Why you should beware of risky margin trading and avoid it at all costs. Margin trading is a form of trading that involves borrowing money from the broker to buy stocks. The stock price increases, you are entitled to keeping the profits. Margin trading also works if the stock price decreases, but in this case, you are liable for the decline until you repay your debt. Margin trading can be risky due to high volatility and leverage. Leverage is a measure of how much value is invested relative to how much an investor puts up in order to trade securities. Margin accounts can be very risky because it may seem like low-risk transactions on paper, but they don't always work out that way when put into practice. Margin accounts are one of the most dangerous forms of financial trading because they are leveraged accounts, meaning that they are highly volatile. Why it's important to be informed about the dangers of margin trading. Margin trading can be an excellent way to make money for investors who are confident in the markets. However, it can also lead to major disasters for investors who are not prepared. If you enjoyed this video, smash the like button now and subscribe to our channel to make sure you don't miss another video.